Global turbulence since the outbreak of the Russia-Ukraine war led to a V-shaped market trajectory in the first half of the current fiscal. In 3 months to June, investors went looking for cover as equities crashed in the backdrop decadal high global inflation and disrupted supply chains. However, from July to September, Indian equities bounced back on the back of steady economic growth despite interest rates hikes by the Reserve Bank of India and the return of foreign portfolio investors.
First half of the financial year was actually a very challenging time for the financial markets, mainly on account of the lingering impact of the Russian invasion of Ukraine and the global inflation, the hard money policy followed by most of the central banks, including the Fed and ECB and the Reserve Bank of India. All these things posed a major challenge to financial markets.
The benchmark S&P BSE Sensex and the Nifty 50 indices fell about 2% each between April and September this fiscal year. In the broader markets, the small caps suffered sharper blows, with the Nifty Small Cap Index plunging around 9.5%. On the contrary, mid-caps were the only rewarding segment, with the Nifty Mid-Cap Index climbing 3% during the period. Among individual stocks, Adani Power and Mazagon Dock Shipbuilders more than doubled investors' wealth in 6 months as they surged over 100%. On the downside, Brightcom Group, Tanla Platforms and TV18 Broadcast cracked up to 65%. Going forward, analysts expect India Inc.'s corporate profitability to take beating in the second half of the fiscal year amid sustained monetary tightening.
Tight money policy being followed by the central banks, the dwindling liquidity in the markets and the rising interest rates will all have some impact on the financial markets and would also impact the cost of funds and also to a large extent the corporate earnings and corporate profitability. One of the things which investors could be looking at is that every time there is a corrective downward movement in the markets, please buy into the markets to build a long-term investment portfolio.
That said, the near-term texture of the markets remains uncertain, with global headwinds weighing on the sentiment. In this holiday-truncated week, a slew of macroeconomic data will guide equities, including September GST collection data, manufacturing and services PMI data, and auto sales data. That apart, investors may see fund rotation ahead of the Q2 results season.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.